How do I get that link to the chat? I can't hear the music.
Oh, you can't hear the music.
I can't hear the music. You're just sitting there with the headphones on, like, bopping around. I'm like, what's going on? Where's the chat? Hello and welcome. You're joining us live on the Investor Lab. As you can tell, it is live.
We will nail this one day.
One day we'll get there. One day we'll work out how to do it. It is, of course, the epicenter for passionate people seeking life of freedom, choice, and abundance. My name is Goose.
My name is Gabby.
And we're here to talk about a very interesting topic today.
We are.
Bitcoin.
Yes.
Which is a little bit interesting, I think, because most people realize we have a property investment company. We've been talking about property investing for the last 5 years or 6 years, nearly actually coming up to 6 years.
Coming up 6 years, yeah.
Coming up to 6 years. And the thing about Bitcoin is, and one of the redeeming characteristics of it is, it doesn't, it's very hard to commercialize. It's a very independent asset.
Yeah.
So we don't have some course to sell about how to trade Bitcoin. We don't sell Bitcoin. We don't have a commercial venture based around this. So the only reason we really want to do this episode is because we think it's actually really important for people to start to understand this asset class and how it can actually fit into a paradigm of wealth. The single most important goal for us, both Gabby and I, is to help as many people as possible to what we call it escape the status quo. Some people might say escape the matrix or whatever. I think it has a little few many to other kind of connotations to it or whatever. But effectively create a life of freedom, choice, and abundance and live life on your own terms. And that is the kind of North Star for us. And so if we continue to drive towards that North Star, we must necessarily have conversations that expand beyond just the realm of property. I think this is one of those conversations.
Yeah, for sure. And it's like you said, one of the beautiful things about this asset type is that it's accessible to everyone.
Yeah.
And we'll get into more detail on why that's true. But it is that thing of like, it's actually not really possible to try and monetize it in terms of like somebody selling a course. It's like you just you do the thing and then that's kind of it. Yeah.
It's a commodity and that's actually one of the characteristics about it. Now, but before we get into that, we're going to go through a lot of structure. Morning, Matthew Pitt. If you are here and you are joining us live, make sure you let us know in the chat so we can see you, so we can say hi to you.
Please say hello.
Because this is also going to be, Bitcoin is one of those topics which is both polarizing and complex and all of that kind of stuff. And so one of the challenges we're going to have in this conversation is making sure the conversation's at the right level, right? Because we don't know how much you guys know about Bitcoin. So it's very easy. I know for me, it's going to be very easy to accidentally go down really kind of complex, convoluted rabbit warrens. But I want to make sure this stays accessible. So, we always ask for questions and stuff in the chat. Yep. That's actually one of the benefits of doing this live is that you get to ask questions. We'll answer them live on the episode. So please ask your questions. And there's no question that is the wrong question. We just want to get as much engagement from you guys because we want to help you. And that's the whole function and the reason we're here. Perfect.
Actually, with that in mind, if you are here live, guys, firstly, say hello. Good morning. I mean, it is morning. It's not morning for you anymore, but it's morning for us. If you have some experience with Bitcoin, let us know. Just say, yep, I'm a Bitcoiner or been thinking about it, or can you give us some feedback on where you are currently at with your understanding? Or if you're brand new as well, if you're like, I've heard it on the news, I've heard some people talking about it, but I really don't understand it. Can you give us a little bit of insight into where you are at in terms of your understanding? Obviously, we've touched on it a couple of times over the last 5 episodes that we've done in this format now. And particularly episode 1, where we started with what is money, really, that's the fundamentals of everything we're kind of going to talk about today. And then episode 2 is about liquidity and why, like the influence of money supply on values and things. And then episode 3, we really broke down all the different asset types and Bitcoin was a part of that. And so we started to tease on how Bitcoin fits in this whole investment space and the concepts of being an investor thinking through multiple asset types. And we've really gotten more feedback from everyone of like, can you just do an episode on Bitcoin? So that's kind of where we are today. This one, it's the function, and what we want you guys to walk away with is really understanding why you should consider owning it as a property investor. That's kind of the angle we want for this episode, so that you can walk away and go, okay, I feel like this is probably something to do, something for me to do. Like you were saying, there's no hidden agenda for us with this. It's something that we have done a lot of research on in the last couple of years, and it's just part of this platform is being able to educate people on the asset and bring you across that way.
It's also one of those things that it's a topic that we could literally do, 100 episodes on, exploring all the many different facets of it. So the significant probability is we're not going to cover everything about Bitcoin in this episode. So this is not going to be everything you ever need to know about Bitcoin all wrapped up in one episode. It'll be part of a conversation that'll probably be an ongoing conversation over the coming years as we continue to have this discussion. Yep. So you kind of touched on an interesting maybe starting point there, in that it really starts with money. What is money? Now, we did cover that. We did a whole episode on that, so I'm not going to hang around there too long. But the fundamental problem that we all face is that what we want to do is we want to transport our economic energy through time and space. And so we look for ways to do that effectively. Now, if you're watching this podcast, then real estate is probably one of those ways that you've considered transporting your economic energy through time and space. Now, just because real estate has become monetized over and above its utility value of having shelter and a place to sleep. The basic premise here is that political currencies and fiat currencies are debasing over time. We're losing our purchasing power, and that is making it harder and harder to get ahead. So therefore, we must seek better monetary alternatives. Bitcoin is a monetary alternative. Now, there's a difference between money and currency. We've covered that in previous episodes as well. But from a money perspective, the ability to transport economic energy through time and space, Bitcoin has some very unique and very redeeming characteristics which make this extremely viable. The way that I describe Bitcoin is it's the most pristine store of economic energy available on the planet today, which is a pretty big statement. But I've found that statement, the more that I've kind of like sat with it and rolled around with it, the more true that I believe it is. Now, that doesn't necessarily mean it is the best investment on the planet. And you get a lot of Bitcoiners that sort of get brainwashed into this kind of like cult of Bitcoin, that the only thing you should own is Bitcoin. You should have 100% of your net worth in Bitcoin. Everything should be Bitcoin. Everything else is, everything's second, third, fourth, everything. Nothing's as good as Bitcoin. I don't think that's true. Like, I think Bitcoin is an extremely empowering and fundamentally transformative discovery, or however we want to describe it, right? An invention. Yep. But it is not the be-all and end-all, but it does have some redeeming characteristics. So I wrote down a couple of things here. It is a pristine store of value that is highly liquid, highly portable, highly divisible, absolutely scarce, absolutely secure, completely decentralized, that requires no third-party intermediaries and has no issuer. Now, that is really, really interesting, right? That is really, really interesting, because when you have those characteristics around money, that means that you can transport your economic energy through time and space effectively. It takes away a lot of the risks, political risks, environmental risks, social risks that come with other ways that you may seek to transport your economic energy through time and space. And because of these characteristics, it is like gold, it is like real estate, but it is better, because you can't... For example, you can't move your property. So if you had a property in Victoria and then the Victorian government changed the tenancy laws, or you had a choice, do you sell the property, or do you keep the property and put up with taxes and stuff that you're not happy with? You can't just pick the property up and move it. So things like its divisibility, things like its portability, things like its absolute scarcity are some of the things that make it a very, very interesting asset for anyone to consider. And I think it's going to be more beneficial to some people than others, and I really want to talk about that in a second, but I'm mindful I have been talking for a while. Do you have anything you want to add?
No, it's fine. I think maybe if we start on just when you said it's incredibly scarce.
Yeah.
I think as well, thinking through people listening who are, one of the benefits of real estate is obviously you can develop real estate, but in terms of you can't create more land. So there's a scarcity element that people seem to like about real estate as an investment asset. what makes Bitcoin scarce, just as a basic level?
Yeah,
Like,
so
if people have no idea.
So the first things first. People say you can't make any more land, but they do, right? All you need to do is go to Dubai, and they built like hundreds of fake islands and stuff. So you literally can go and put more dirt, take dirt from somewhere, suck up sand from somewhere else in the ocean, go build some islands. You know, huge parts of, you know, cities have been built on reclaimed land. So by definition, you can. Now, that is at the edges, that is at the margin, that is not obviously going to be making a big difference. You're not going to double the size of Australia by adding more by sticking more sand on the edges, right? So it is generally scarce. But then the asset that you put on top of the land, the actual kind of properties that you build, they are not absolutely scarce. They're defined by things like building codes and all of that kind of stuff. Now, if every property in Australia was mandated that it had to be on a 1 acre block, then there'd be a very specific number of properties that could fit into the country of Australia. But they don't do that. They keep changing building laws, and you can get denser and denser. Then you end up with high rises and all of that kind of stuff. So it is generally scarce, and that is actually one of the things that real estate investors really like is that scarcity. So one of the common characteristics, or some of the common characteristics between Bitcoin and real estate, is that it is a scarce, desirable asset. That's actually where it's very, very similar. I'll just touch on gold as well, which is really interesting because gold is also a scarce, desirable asset, but gold supply inflates by about 2% a year, which means that technically it floats between about 1.5 and 2% a year increase in gold supply, which means that the half-life of money in gold is about 40 years, which means to say that, you know, the amount of gold on Earth available doubles roughly every 40 years, which means that the nominal value halves over that period of time. And if you also then think about building approval rates in Australia, they increase by, let's say, circa 2% a year as well. So you have roughly a 2% increase in supply coming into the market in Australia. Now, you have demand as well. You have immigrants coming in and all of that kind of stuff. Bitcoin is a little different because it is absolutely scarce in that there will only ever be 21 million. Now, the reason it will only ever be 21 million is because that is how it was programmed. Bitcoin is effectively a software technology that was developed and gifted to the world by an unknown actor known as Satoshi Nakamoto, who no one knows who they are and potentially is dead because Satoshi Nakamoto has like 1 million Bitcoin in a wallet, which has never been touched, never been moved, never been hacked. But programmatically, Bitcoin only has 21 million coins. Now, the thing about Bitcoin is it's an open source technology, which means that in theory, you could actually increase the supply of Bitcoin. In theory, somebody could ship a code adjustment into the Bitcoin network and we could end up with more than 21 million Bitcoin. But here's what actually makes it so strong is its decentralized nature. For that to happen, on the Bitcoin network, and this is actually one of the reasons that Bitcoin carries so much value, we're getting into kind of valuation and how I think it's going to grow over time and why, due to Metcalfe's law. But in the network, there are nodes, right? So there are people that run nodes, and those nodes effectively validate the code that is kind of floating around on the internet. It's kind of, you know, the monetary properties of Bitcoin are transmitted by the internet, not dissimilarly from how money in your Australian dollars or any other currency is communicated through the internet. Because in practice, there is more money or currency in the world than there is actual physical currency because most of it's digital anyway. So there are nodes which validate the code all around the planet. There's roughly, last I think I checked, I might get this slightly wrong, but I think there's about 21,000 nodes on the planet at the moment. There are hundreds of millions of Bitcoin users, but there are about 21,000 nodes. And those nodes effectively validate the code. That's not the correct specific terminology, and somebody will be like, they're not validators, but that's effectively what they're doing. Now, in order for someone to change the code base of Bitcoin, you would need to have 51% of all of those nodes validate that change on the network. Now, a way to think about this is, let's say that we got on a bus, and on that bus we had 21 people on the bus. It was a 21-seater bus, and we were going to drive from Melbourne to Sydney. And we had the perfect bus. We actually had this bus that was specifically and perfectly designed to go from Melbourne to Sydney. You did without having any stops. It had a fuel tank that was big enough to go the whole distance. It had toilets on there. You had snacks on there. There was plenty of room to lay down. There was plenty of entertainment. Everything about it was perfect. And it would even drive itself. It was a full self-driving bus that would get 21 people all the way to Sydney. Perfect in every way. But here's the catch. It only went 70 kilometers an hour. So it'd get there perfectly, but it would only go 70 kilometers an hour. Now, if I stood up on the bus halfway along and I said, you know what we should do? We should take the engine out. Because if we take the engine out, it's going to be lighter. And if it's lighter, it might go faster. Now, of course, that's a bad idea, right? But I would have to get 11 of 21 people on that bus to say that that is a good idea before I could go take the engine out. Now, what's the probability that I'm going to get 11 out of 21 people on that bus to say, go take the engine out? Pretty unlikely. So one of the strengths of Bitcoin is its decentralized nature and the fact that you have all of these nodes which actually keep the security and keep the decentralization of the network. So given that the primary use case of Bitcoin is as a store of value, I can't see any reason why 51% of the network would seek to destroy the single thing that it is. Like in that example, so you've got this perfectly built bus, let's go destroy the perfectly built bus. Why would anyone want to do that, right? So that in and of itself kind of keeps it secure.
Yeah. The decentralization, like that concept of this asset, that's essentially why it was created. Theoretically, no one actually technically knows, but from the premise of not having third parties need to intermediate any transactions or anything to do with moving your money around.
Yeah.
And having that centralized control somewhere in the middle about where the funds go and what control and what you can do with those funds. And I think that's a really, like for me, when I started learning about this, that was a really key thing to start thinking about. And again, going back to episode 1, there is an element of the way that the traditional finance system operates is it is all very centralized. You know, in Australia, we have the big 4 banks. We have a lot of big major banks that most people house their savings in. They keep their savings in their bank accounts, which is digital.
Yeah, but so I don't disagree. But like, here's actually like a fundamental problem with that. You go put your money in the bank, and then you don't own the money anymore.
Yeah, for sure.
The bank owes you the money.
Yeah.
So you don't actually have your money anymore.
Yeah.
And then if you want to take that money out of the country, there are things called capital controls, and they will stop you doing that. Mm-hmm. Go and try and fly out of the country with more than $10,000 of cash.
Yeah.
They will stop you. Like, okay, so you want to store your money in gold? Okay, try and take more than $10,000 worth of gold through an airport.
Yeah.
They'll set off the metal detectors, and then they'll say, what's all that? And then they'll confiscate it, and you might go to jail. So the problem...
And you won't get your money back.
And you won't get your money back.
Yeah.
Get your money back. They'll confiscate it, right? So the problem is we actually aren't in control of our money anyway, and we're confined in a system where we lose control. Like, so we expend our economic energy to go and create value. Then we try and store that value. But in storing that value, we actually hand over that economic energy, and we no longer own it anymore. And that is actually really, really problematic. Now, we've seen that a lot actually, even when we started buying Bitcoin, we were still banking in Australia. For those of you who don't know, we live overseas these days. We were still banking in Australia, and we would actually have the banks in Australia saying, no, you can't go and transfer your money to a crypto exchange to buy Bitcoin. It's like, well, it's our money. What are you doing? If you go and deposit more than $10,000 in a bank, you get flagged as a criminal. You want to take out more. If you go down the bank today and say, give me $100,000 of my cash, if you've got $100,000, they won't have it, right? It's not there. So we have all these kind of fundamental problems. Now, the aha moment for me, when it first clicked for me, because like a lot of people think that Bitcoin, is some kind of like weird speculative, magic internet money scam type thing. I didn't understand it either. I didn't get it. I tried investing in Bitcoin. Every time I bought Bitcoin, it went down. Then I'd take my money out. I'd be like, okay, that went. Then I'd try again, and then it'd go down. Literally, I'd be like, all right, it's time. I'd buy it, and then it'd go down. I'd be like, this sucks, right? And so we never ended up owning any Bitcoin. Yeah. The moment it clicked for me was in 2023 when I finally realized it was a way to take your money out of the traditional finance system. And that is so powerful because it is in fact your economic energy.
Yeah.
And so to have personal sovereignty and personal control over your economic energy is the most important thing. You know, people often talk about like, oh, well, like what's the utility of Bitcoin? It doesn't do anything. There is no greater utility than store of value. There is no greater utility than being personally sovereign and being able to transport your economic energy through time and space. That is the most important thing you can do, because without that, what else do you have? You know, how else do you create prosperity? So I think that the decentralized nature and the fact that it doesn't require any third-party intermediaries is actually one of the most important characteristics of it. You know, you can travel. Not that I expect that many of the people listening to this podcast have $1 billion, but you could travel from one country to another with $1 billion, with your seed phrase in your head, and effectively cross borders with $1 billion. You can't do that in any other way, right? And so the absolute scarcity, absolute decentralization, because it is an asset without an issuer and without a controller. There's no CEO of Bitcoin. There's no foundation that runs Bitcoin. You look at every other, and this is why Bitcoin is different from every other crypto as well. You look at every other crypto project, they're effectively technology companies. You look at Ethereum, you look at Solana, you look at any of these other kind of things, they're effectively technology companies that are seeking to solve utility problems. And Bitcoin is a commodity. It is an asset without an issuer, just like gold, just like soybeans. And it is absolutely scarce, unlike gold, unlike soybeans, unlike oil. They're not absolutely scarce. We keep finding new ways to kind of tap into those resources and expand that supply. And these kind of things actually make it a very, very, very unique asset class, which is both defensive and aggressive.
Yeah. As you were just talking then, sorry, I was thinking through what really sparked my interest. I think would have been March last year. March 2024. So you and I were we were on a bike trip through central Vietnam. And I've just found the photos. I might try and share them.
Yeah, go for it. Yep.
Let me figure this out.
Whilst you're figuring that out, do you want me to kind of expand on what you're...
No.
Okay, got it.
I'd like to talk about it, I think. Okay, cool. So we were going through Vietnam, right? In these areas of Vietnam, they don't even speak Vietnamese. A lot of these villages have their own dialect that they speak. So we were with a Vietnamese guy and he was trying to communicate with them and he couldn't even communicate. That's how remote these villages are. And we were going through here. We just pulled into this village to start. We were playing with the kids, which is super cute. But we happened to notice this image here. And I should have asked you for a better photo, but this is what I've got on my computer. If you can see here at the back, there is this coffee van, this little coffee hut in this little village in central Vietnam somewhere that you buy coffee with Bitcoin. And I just found this really fascinating because it started getting me thinking, like, what the hell is this asset? Because you can hear about... I think particularly in the investment space and very much right now, it's very topical to be thinking of this as an investment vehicle and thinking about it of what capital gain can I get. But when you see the utility in this sense for villages that cannot open bank accounts, they don't have the qualifications, they don't have the starting capital, they can't access their currency in the same way that most people can. And this is about 40% of the population of the world. Isn't it more than that?
Isn't it like 66% of the world's population is unbanked?
I think it's about 40.
Okay, there you go.
Yeah, I just looked it up yesterday. But it's about 40% of the people in the entire world cannot actually open bank accounts.
Yeah.
And in a lot of developing countries, Bitcoin is becoming the solution for those people because they can open an account, they can open a wallet just themselves, and there's no minimum deposit, and they can actually start to transact and use the funds without needing to involve a bank. They can just send Bitcoin to each other like they're doing here. So this is just the start of something that I was like, this is really interesting from a utility perspective, because I think as well, a lot of people, when we come into this this conversation of thinking through Bitcoin, a big objection is like, but there's no utility value, you know, compared to real estate where there's a house, people need somewhere to live. Totally agree. Yeah. Compare that with Bitcoin. You're like, well, what's the utility value? It's just a bunch of zeros and ones. When you start to think about the potential change that it can have on the world, there's a huge utility value there.
Yeah, and it's such a good point, right? Because a lot of people think about Bitcoin and they go, oh, it's depending on whether you're measuring it in US dollars or Australian dollars. Like I'll use US dollars. Oh, it's about $100,000 a Bitcoin. I can't afford to buy a Bitcoin. But the thing is, it's divisible by 100 million. So there's 100 million satoshis in every for every Bitcoin. So I don't know what that equates to, but it's cents, right? It's cents per satoshi. And you've got 40% of the world that is unbanked, which means they don't have access to a financial system, which means they have no way to store and transport their economic energy other than keeping cash under the bed or something like that. And that's a big problem, right? And so this is also why it's the growth of Bitcoin is following a network effect, Metcalfe's law, right? So Metcalfe's law is basically describes network effects, right? So Metcalfe's law states that the financial value or influence of a network is proportional to the square of the number of connected users. Right. So we've seen network effects take hold in things like Facebook and a whole bunch of other stuff where the more users, the actual more benefit that this thing provides. Right. And so if you look at where Bitcoin is proliferating the most, it's actually in developing countries. Why is it proliferating most in developing countries? It's proliferating most in developing countries because developing countries typically have weaker currencies. So if you look at the naira or the lira or the peso, you look at all these things. Like Argentina had over 200% inflation, right? Last year, which is super interesting, and we could talk about Javier Milei, but let's stay on track. And so you've got all these people where their currency, if they even have access to it, is debasing at a phenomenal rate, and their purchasing power is getting corroded, and things are getting more expensive. They don't have access to banks, right? And so they have no way to get out of a broken system. So you have more and more people starting to adopt this medium of exchange, this way to store value. Now, as a reminder, money has three properties, like good, and the degree to which it fulfills these three properties is the degree to which it is good money. So the three properties are store of value, medium of exchange, and unit of account. Now, the primary use case of Bitcoin is store of value. I actually think there are better technologies being developed for medium of exchange. For example, Solana or something like that would actually probably be a better medium of exchange. And those two things can be used interchangeably, right? So you would also say gold, which for thousands of years was the base form of money until we went off the gold standard. That is not very easily divisible, portable, verifiable. It's got some very terrible characteristics as money. It's also very hard to spend at the shops, right? So you can't use it very easily for transactions. So, Bitcoin is like gold and like real estate in many, many ways, except that it is more accessible, more portable, and more divisible, more verifiable, easier in so many ways, right? So, and I think that this ability for it to continue to grow and proliferate is actually part of the strength. That's actually why it's growing so much. It's actually growing faster than you said. Do you actually want to share that graphic of Bitcoin adoption or crypto adoption versus the internet? Because I think this is like super, super interesting.
Yeah. Give me 1 second. This guy
here.
Cool.
So if you look at this chart here, now this does say crypto owners, right? So this does take into consideration not just Bitcoin but all crypto. But given that Bitcoin is the dominant force in the kind of crypto space, it's a decent enough proxy. In 2024. There were over 500 million users of crypto. If you compare this to the growth rate of the internet, you can see the orange bars there. Are we actually showing this? Can we actually see this yet?
Yeah.
All right. So yeah, okay. So you can see here that if you if you match up the time frames from the kind of launch, crypto is growing faster than the internet. Why? It's because the internet already exists as rails. So crypto is effectively a monetary system for the internet, which is super, super interesting, super powerful. It's this network effect that is actually going to drive continued adoption, and it is going to drive the continued utility and use case for the asset, which I think is kind of part of a broader thesis, which we'll talk about in a little minute. I want to change gears a little bit though.
Yep.
So one of the biggest issues, and one of the things I think that one of the reasons I think that people need to think about Bitcoin, particularly for people who aren't yet in property, because property is getting harder and harder to get into.
Yeah.
So the average savings rate in Australia, believe it or not, is actually $226 a month for the average Australian household.
Yep.
Now, most people that we speak to people that are coming to Dashdot have a savings rate of somewhere between $1,000 and $3,000 a month. So let's just take $2,000 a month as a savings rate, which is almost 10 times what the national average savings rate is, which is crazy. Yep. Now, the average property price in Australia is roughly $1 million, right? Roughly. If you had a 10% deposit plus 10% cost, you're going to need roughly $200,000 to get into a property in Australia. Now, property prices in Australia are increasing by roughly 8.26% a year, or we'll call it 10% for kind of easy maths. Now, if you are saving $2,000 a month, how long is it going to take you to get to $200,000? It's going to take you 100 months. Mm-hmm. So 100 months is nearly 10 years, right? 100 months is 8 years, right? So 100 divided by 12, 8.33 years, yeah. So it's going to take you 8.33 years just to try and save up enough money. And the reason for that, part of the problem with that is property prices are going to continue to go up at a faster rate than you are able to save. So in 10 years' time, that property will have gone up by, let's say, that property is going to be worth closer to $2 million, right? It will have pretty much nearly doubled in that period of time. So you would actually need $400,000, which means, and you've only saved $200,000, which means you're actually never going to be able to get to the point where you can. So in order to accelerate your ability to get into property, Bitcoin actually makes sense as a savings mechanism. Now, what's interesting, kind of a different take on this is, let's say you only need $100,000 to get into a property, because you don't need to go and buy $1 million property. Mm-hmm. But let's say you needed $100,000 to get into a property, which is kind of about right. So we have clients that start with us, and they've got about $70,000 on the kind of low end. A lot of people have got closer to $150,000. Let's call it $100,000. On the same savings rate, it would take you 4.2 years or 4.15 years roughly to save up enough money for a deposit for a property. Now, what's interesting about that is that Bitcoin moves in cycles, and those cycles are roughly 4 years. Your time horizon for investing in Bitcoin, if you want to use Bitcoin as a store of value or a savings mechanism, which is actually really what it is. People think it's a make money technology. I think it's a save money technology. It should be based on around about a 4-year time horizon, because over any 4-year time horizon, you have a 100% success rate of making money in Bitcoin, right? Bitcoin is a highly volatile asset. But what also is true is that houses devalue, or everything in the world devalues against Bitcoin. Have you got the chart there of Australian house prices versus Bitcoin over time? Mm-hmm. So if you are trying to get into the market and you feel like the market is continually getting away from you, then you actually need to start thinking, okay, well, if my fiat political currency is a melting ice cube and I'm losing more and more of my purchasing power over time, how can I actually start to get ahead? Or is it just that I'm going to get locked out forever? Now, I'll reiterate that I actually think that real estate in Australia, residential real estate in Australia, is the best risk-adjusted return asset that you can invest in. But the thing is, it is getting harder. This chart here that you see on the screen is actually a chart that maps the number of Bitcoin required to buy a property in Australia based on the Australian median house price. In 2014, it was over 3,000 Bitcoin, and in 2024, it's less than 10. I think it's 4 or 5 Bitcoin to buy the median property in Australia. So you can see that against Bitcoin, housing prices are actually falling, which actually means that Bitcoin is a mechanism to make housing more affordable for everyday Australians and also for investors. So as a way to get into property, this can actually be a very, very useful mechanism as well. Given that most people actually want to own a home, or one of the biggest goals for most property investors is to invest in order to be able to save enough or to make enough money to be able to go and buy the dream home. This is a really important mechanism, and this is actually one of the reasons that I think it fits within part of the property conversation, because property is getting harder and harder to get into. So what techniques or methods could you use to help you grow your wealth faster and get into property faster?
Yeah. And this is, again, it was something that when you and I really spoke about it and really got clear of, like, this is actually going to help a lot of people in terms of getting into property. That's part of why we wanted to start talking about it. It was realizing okay, housing affordability is getting worse. People still want to buy homes. People still want to invest in property, but they don't always have the deposit because cost of living is going up. Their cash is eroding. But here is this invention that allows them to preserve their wealth and actually accelerate their savings so that they can get into property. And so that was it was a big thing, I think, for me personally, realizing that that is a way that people can use this in concert with real estate. Yeah,
it's such an interesting idea because of the absolute scarcity. one of the most interesting parts of the invention or the discovery, right, or the invention of Bitcoin, part of the invention of Bitcoin was the discovery of absolute scarcity. We've never really had absolute scarcity on planet Earth. And so we have a monetary asset which has absolute scarcity, which is meeting an almost infinite demand. So when you have infinite demand that meets absolute scarcity, like that's like, like the old, unstoppable force meets an immovable object type thing. It's kind of crazy to kind of think about as well, which I don't know. I just find that whole kind of concept so interesting.
Yeah. I'm thinking about leverage.
Yeah.
So in terms of like Bitcoin as an asset class compared to gold or real estate, there's a lot of pros.
Yeah.
I feel like leverage is a reason why real estate outperforms in certain aspects, right? Do you want to expand on that a little?
Yeah, I mean, I can expand on that. That's actually like one of the most important aspects of particularly. I always say Australian residential real estate because there's a big difference between Australian residential real estate and every other country on planet Earth, and I think it's very important. Just in the same way that you could say crypto, and you could mean Bitcoin, and also you could mean fart coin, which funnily enough is an actual thing.
Yeah, it's a big fart coin.
Yeah. Well, it's like it kind of shows to highlight the ridiculousness of it, right? So there's such a broad spectrum of things that fit. So just to kind of carte blanche say real estate, are you talking about office buildings? Are you talking about yurt storage facilities in Mongolia? Like
I was talking about
yurts. I mean, so real estate itself is it's the world's largest asset class with $330 trillion, right? Which is massive.
And, a lot of yurts.
And Peter, I see your question now. I'm going to talk about that in a little minute because as a percentage of the total asset pool, anyway, we'll circle back to that. So Australian residential real estate is extremely powerful because of your ability to leverage it.
Yep.
Right now, if you just compared top line growth to top line growth, Bitcoin has grown roughly, depending on when you start the measurement, roughly 60% compound annual growth rate over the last 4 or 5 years. Right, depends on when you measure it from and to, and there's sort of always going to be some competing differences. And I use those more recent years versus some longer term time horizon because otherwise you're talking about 120% compound annual growth rate, and that's not pragmatically realistic moving forward, right? So, sort of 50 to 60% compound annual growth rate over the last 4 or 5 years, right? Which is awesome. If you then measured that against Australian real estate, you'd say, well, Australian real estate grows by, on average, 8.25%. Oh, okay, well, Bitcoin wins. Well, not really, right? So when you combine leverage with Australian real estate, that's actually where you start to accrete most of the value. So if you, for example, just for simplicity's sake, let's say you buy a $500,000 property with a 10% deposit, and we won't take costs into consideration here. It's just to highlight the point. You would put $50,000 into a $500,000 property. If that $500,000 property goes up by 10%, it's gone up by $50,000, you've effectively made 100% return on invested capital. Mm-hmm. Now, that is just to kind of highlight the point. There's more complexity to that. You do have purchasing costs like stamp duty and all of that other kind of stuff as well. But that's how you get the returns. And we systematically see our clients, and there's probably clients watching this now who can attest to this themselves, that get hundreds of percents return on invested capital in 12 months, 24 months, 36 months. Yep. Right. So if you then compare, I was looking at one of our clients' properties today. He's made 400% return on invested capital in the last 4 years. Right now, technically, if you bought Bitcoin at the bottom of the last bear market, I think you'd be up about 534%. So theoretically, but that would be slightly higher. But that's sort of like a marginal kind of edge case if you happen to time the bottom perfectly and held it today. But in a very realistic sense, the returns that you can achieve in real estate are more reliably similar to, or more reliably better than what you can probably get in Bitcoin. The problem is that leverage is a finite kind of. There's a limit to how much leverage you can get. Right now, there are ways that you can extend your ability to get leverage in real estate using things like trust and getting creative. That's a whole kind of another topic, and we actually talked a little bit about it last week in last week's episode. But the point here is that you have another asset class that doesn't require leverage. Now, Bitcoin is a lot more volatile. It's a lot more volatile because it's a younger asset class that's growing quickly, that trades 24/7, is a globally accessible asset, right? So you've got, it's moving all of the time. Real estate is highly illiquid, right? Which means that you don't have a lot of price volatility because it's a highly illiquid market. So you increase the liquidity, you increase the volatility. And that is fine. Volatility isn't bad, right? Volatility doesn't necessarily equal risk, because if you've got a continuously upward trending bias, it's kind of fine. So you can get similar returns in Australian residential real estate than you can in Bitcoin, but they're different. They kind of solve the same problem in different ways.
Yep.
And I would absolutely not recommend using leverage on Bitcoin. I think that would be a terrible idea because of the volatility. Yep. So one of the things about Australian real estate is it's low volatility, which actually means that it's really quite safe to use leverage on Australian residential real estate. But Bitcoin, because it is volatile, that is when you would introduce risk. Mm-hmm. And I don't think you need to do that. Mm-hmm. And just to kind of contextualize this a little bit as well, because I don't, so what, like, do you go out and do you just sell everything and go buy Bitcoin, or are you 50%? Do you have 50% of your net worth in Bitcoin or whatever? I just did a calculation earlier. Now, if we consider, so people should consider both liquid and illiquid assets, right? So real estate is an illiquid asset. Now, I just did a quick look at what percentage of our net worth, including our illiquid assets, we have in Bitcoin. It's about 5%. Mm-hmm. Right, but our illiquid assets include business, private equity, real estate, all of these things that you can't easily trade. Right, so that kind of should give people some context. From a liquid perspective, it's like over 40%, right, in Bitcoin. Right, so there's a kind of that in and of itself should explain how to kind of think about these differences. Mm-hmm. A significantly greater portion of our wealth is exposed to Australian residential real estate, for example.
Yep. With that as well, in terms of having it liquid, so there's a question that came through about our personal goals.
Yeah.
Are you forever holders and use this future currency, or do you have a sell target? So it's something to factor in as an individual, right? Me personally, because, and this is where we differ, right? I have less interest in short-term investment and trading, and I'm much more long-term. I want to believe in the asset type and place a bet and kind of let it sit forever, particularly when you dive more into Bitcoin and you really learn about the asset and you can see where it's looking like it's going to go in future. I personally feel confident in holding long-term. There are use cases, obviously, that if you need to liquidate it for any other purpose, if you are, maybe you're slightly cash flow negative in your portfolio or something, or there's other reasons, something terrible happens, touch wood, in your life, and you need those funds and you don't have them in cash anymore, then of course, one of the beautiful things of Bitcoin is that it is super liquid. You have access to it. You can sell it back through the exchange and get it back out in cash and use that for whatever you need. So it is very liquid. So that is a pro versus Australian real estate.
Yeah.
But yeah, me personally, I think about it long term, but it is very much possible to have it more liquid in the short term.
I'm not quite sure why you think we have an opposing opinion on that, because I actually think it has to be long term. I think so part of the kind of consideration at the moment, and part of the reason we're talking about this, is lots of people are talking about Bitcoin. Yeah. Oh, it's at all-time highs and all this kind of stuff. And it's very easy for people to start to FOMO into Bitcoin and be like, oh my God, we should go buy Bitcoin and we should get rich. If you're investing in Bitcoin now, you should not be thinking about this cycle. And we can maybe actually, there's a graphic around the kind of Bitcoin cycles, right? You should actually not be thinking about this Bitcoin cycle. You should be thinking about the next Bitcoin cycle. Now, Bitcoin typically works in 4-year cycles, right? So, and the reason there's, we could get lost in the kind of mechanics of it, but there's roughly every 4 years. So the way that Bitcoin comes into existence is it is mined, is the terminology. And the way that it is mined is that miners solve cryptographic puzzles, which basically expand the block space, and they get rewarded for that in Bitcoin, right? Now, and that is called a block reward. They create blocks on the blockchain, and they get a block reward. That block reward is halved roughly every 4 years. It's actually based on the number of blocks that get created, but just happens to be roughly every 4 years. It's not exactly every 4 years. And as the block reward gets halved, that actually decreases the supply of Bitcoin coming onto the market. 93% of all Bitcoin has been mined. So we're at the very, very fine edge of this kind of like growth of Bitcoin coming into the market. Now, the thing is that block reward halving does have an influence, as well as things like global liquidity cycles. And there's probably like 7 or 8 different factors which all converge to create and reinforce this 4-year cyclicality in Bitcoin. Now, that is very important to understand. Now, I don't know what the future is going to hold. Maybe Bitcoin's just going to go up forever from here. I don't know, right? No one knows. Yeah. You could speculate that maybe it would because of institutional investment and all of this kind of stuff, and maybe that is true. But a more conservative way to look at it would be to assume that it's going to have some cyclicality. And what tends to happen is you tend to have these different phases where you'll have a bear market period, which is when it goes down in value. Then you'll have a bit of a kind of like a kind of like bottom of the market. It's where it's starting to recover a little bit. Then it'll start to come up, and you can kind of see these shaded in the red is a bear market. Then you kind of blue is the kind of bottom of the market. Oh, here we go. Accumulation, growth, bubble, and crash. Right. So when you go into the bubble phase, that's kind of the 4th phase, and that's where you typically see irrational exuberance. Now, I don't think we are in yet the bubble phase. And in fact, if you look at this graph here, it's actually a really good representation. I think we're coming to the end of the growth phase just before we move into the kind of irrational exuberance phase. Now, you can make a bunch of money in the irrational exuberance phase, the bubble phase, but that is short-term thinking, right? So if I was to kind of speculate on when I think that kind of that bubble kind of period, or the kind of irrational exuberance part of the market, that phase, that 4th phase of the cycle, that's probably going to be somewhere between here and the end of 2025, or potentially, based on some changes in the macroeconomic environment, potentially early 2026. Now, that's a pretty short time frame. And so I think that anyone who's investing in the in the 4th quarter should not be thinking about what's happening this cycle, but should actually be thinking about the next cycle. What happens in 2028, 2029, 2030, that kind of thing. And so thinking long term is very, very important. And this is actually how it fits into your property portfolio too. Now, we talked last week about how you might say, for example, if you've got surplus capital, you might park that in an offset account. And that's a really good way to do it, good thing to do. There are other ways that you can get better returns too. But if you were to turn around and say, oh, okay, I want to buy a property next year. So what I'm going to do is I'm going to take all of my money out of my offset accounts and go buy Bitcoin, because Bitcoin's going to go up and I'm going to make all this money. And then I'm not sure I would advise that that's a sensible thing to do, because what it's very short-term thinking in a volatile asset, and I think you need to be kind of quite cautious and careful of it. So the way that I think about Bitcoin is I'm not thinking so much about like, oh, what's the Bitcoin price going to be this year, and we're going to make it. So I'm like, okay, what's Bitcoin going to be like in 5 years' time? So what do I think it's and we kind of put it in the show notes. By 2030, what do I think it's going to be then? My personal opinion is that it's going to be worth close to $1 million by about 2030. But I also think it's going to be worth close to $10 million by around 2045. So, and the reason I've formed that opinion is because since I had my aha moment, which was in mid 2023, I've done I've done hundreds and hundreds, maybe over 1,000 of hours of research on this specific asset to form an opinion around what I think about it. Now, if you think about it in the way that I think about it, then it's kind of like, well, why wouldn't you hold it long term? At the moment, let's say we price it in US dollars. We say it's $100,000. If I think it's going to be worth $1 million in 5 years' time, that's 10x in 5 years. Let's say I'm wrong by 50% and it goes to 500,000 US dollars. That's still a 5x in 5 years. That's still bloody good. Okay. But what if it's going to get to $10 million in 20 years from now? Okay. That's 100x from where it is now. So is that good? And so if you think long term, just like in any investing, you're actually going to get better returns over the long run. Now, is it a hold forever thing? I don't think anything's a hold forever, because if you ended up with, let's say you ended up with $1 billion or $1 trillion of Bitcoin and you never sold any of it, then you would never realize any of the value. I was talking to one of our clients the other day. They've done exceptionally well in their property portfolio. They've made tons of money and we were talking about like they own 6 properties now or something like that, and we're talking about buying more properties, selling down a couple, buying a few more properties, and they were like, this is awesome and we're making so much money, but when do we get to actually enjoy it? And I was like, well, instead of buying 4 properties, why don't we go buy another 3, and then why don't you take some capital off the table for lifestyle chips and go and take your family on a round the world trip or something like that? Wouldn't that be better? You actually have to, like, what's the point of investing if you don't enjoy it along the way? And that, I think it's very important for people to understand. That being said, I am not a Bitcoin trader, right? So we buy Bitcoin to hold Bitcoin long term. At some point, it would make sense for us to utilize some of that capital, that economic energy. Because remember, the function of it is money. The function of it is to transport economic energy through time and space. So at some point, we want to redeem some of that transported economic energy through time and space. We're going to want to do that. But it's not a case of quick buy Bitcoin now. It's going to go from $100,000 to $200,000 and then you sell it and you do this. I think that's all very short-term, reactive, high adrenaline thinking. I think it's the wrong way. It's the wrong way to think about it. That's my point.
Cool.
Yeah.
I was just thinking about, like,
Sorry, I had one other final point. Sorry, I lost my thought.
Go for it.
So, just to kind of like close off that thought. So, Bitcoin in and of itself, we keep that separate, and that's a kind of like that's a don't spend it type thing. Mm-hmm. But I do, in some of our investments, I do think about, okay, well, how do I think shorter term? How do we get shorter term returns? So one of the things that we did is we invested in MicroStrategy. MicroStrategy is, they've just rebranded to Strategy B. I don't know how I feel about that.
Have they really?
Yeah, it's a little anyway. But because they're effectively a Bitcoin proxy, right? So they've become a Bitcoin treasury company, and that was the way that I always thought about that. Is that's Bitcoin we can sell, right? It's like it's not real Bitcoin. It's sort of like a Bitcoin proxy, and it trades at a high volatility and a higher beta. And that was like, we can buy that and we can sell that, and I'm not going to care if we sell that, right? So,
sorry, I should add, we haven't said this is not financial advice yet, which it isn't, guys. Please, we're trying to be educational. Please don't go off and like just copy exactly what we're saying and say Goose and Gabby said I should go and invest in this. Really put in the hours. You need to put in the hours to do this research. Obviously, you're here. This is part of you learning. Yeah. But go and do more research. And look in. If you're thinking, oh, MicroStrategy sounds interesting, or Strategy B sounds interesting. Yeah. Go and consume that stuff. Yeah.
The point of that is you have to develop your own conviction and your own understanding. Yep. Right. If it's
Beautiful.
Okay. I think selling blood and plasma, I think that's got the best exchange rate for Bitcoin, William. So good on you. Yes, you have to develop your own conviction, right? Because if you are just buying and selling or trading based on what somebody else has said, you won't have the foundation to make your own decisions, right? So, and I think this can be part of your education process. Awesome, you got to develop your own conviction, your own understanding. So, I think it's really important.
Yeah, what I was going to say before was, if anyone watching this actually knows Goose and I personally, and you've spoken to us for at least 5 minutes in the last 2 years, you would have probably heard us talk about Bitcoin to some degree, and it's always an element of like what should I do, which is part of everyone has questions of what should I do, how should I invest, should I do this, should I do that, and there is an element of, I'm not going to pull it back up again, but thinking about the cycle and where we are in the cycle, where we are likely about to come into a bull run where the price is going to take off. I hesitate saying is, right? We don't know.
Nobody knows. But no, probabilistically, based on liquidity cycles and a whole bunch of other stuff, it's more likely than not that we'll see price appreciation in Bitcoin over the next 12 months.
Yep. So in terms of the timing of the cycle, now-ish probably is likely about to see significant price rise, right, over the next 12, 24 months. After that, it's likely to have some kind of correction as well, and then the cycle keeps going. And so, but this is where the conviction and the research in the asset type comes in, because yes, now in terms of like the timing of the cycle, would be better to invest now versus in 12 months time, probably. But if you have conviction in the asset type and what it's going to happen over the long term, then whether you buy Bitcoin now or buy Bitcoin in 6 months or 12 months, over the long enough time horizon, it won't make that much of a difference. I think people are getting caught in hearing the hype in the media and from people who have invested in Bitcoin, and they've probably invested like multiple years ago, and they're like, here's all these returns and I can see that it's about to take off again. You need to get in. And so people are really getting this FOMO, and they're rushing into it. So it's this balance of, while simultaneously I feel like I want people to get in soon, it's also understanding that on the long enough time horizon, it's probably going to go up anyway. So the timing isn't as important. That's
specifically why, like, I don't think now is the time to go and just like YOLO all your cash into Bitcoin, right? Like, it's not because it's the fourth innings, and so absolutely, I think that everyone should own some Bitcoin. Right, I mean that. I think everyone should own some Bitcoin. I think there's so many reasons for that, even beyond what we've covered here. But just even the idea of taking personal responsibility for your wealth is huge. Yeah. But that doesn't mean go and YOLO all of your cash into Bitcoin right now because, oh my God, I heard it's going to go up this year and it's going to be a bull year and I'm going to make all this money, because like next year it might go down, right? So understanding that, like, the best time, if there was a time to YOLO all your capital into Bitcoin, it would have been like 2022, right? And we're not in 2022. Right, that was the bottom. That was kind of the bottom dip between the last kind of bull cycle and this cycle. So that's why I say look to the next cycle. Look to the next one. Tomorrow's just putting their dollar cost averaging, which is exactly what I was going to say. So now's the time to get interested. Now's the time to look towards the next cycle. Don't look at this cycle. Don't go, oh, is it going to go from 100,000 US to 120 or 150 or 250 or whatever? Firstly, you have no freaking idea. And secondly, your time horizon's too short. So I absolutely think people should participate, but you should be thinking about, where is this going to go in 4 years or 5 years from now? And based on that, start your investing journey into Bitcoin on that basis. Not what is it going to be in October or December of 2025. So on that basis, get interested, get curious, and start to dollar cost average in. Now, you may want to dollar cost average a little bit more in this year and taper that back, but you should be thinking about a 4 or 5 year investment journey to start to build up capital in this asset class. Now, I am mindful of time. There's some really great questions in there. I am mindful of time, but I also want to talk about Bitcoin as a store of value as a percentage of the total global assets. Can you bring up the that chart that kind of shows real estate versus bonds, Bitcoin, etc.? Some great questions that are coming through as well, and we will aim to get to them as well.
The global wealth chart?
Yeah, that one. Yeah. That one there. So there are now, based on this chart here, this chart here is a fantastic graphic. It's slightly out of date, and I'm going to explain it now. When this graphic was created, the total global asset value was about $900 trillion, and at the time, Bitcoin, the market cap of Bitcoin was about $1 trillion. The Bitcoin market cap is now closer to $2 trillion, and we could reasonably assume that the total global asset value is closer to $1 quadrillion or 1,000 trillion, right? So, but fundamentally, this whole concept still holds true. So we see in here, we've got real estate is worth about $330 trillion globally. Bonds are worth $300 trillion globally. Money itself, $120 trillion. Equities, $115 trillion. Art, collectibles, 18 and 16. Gold, 16 trillion. Bitcoin is about $2 trillion. So when you think about, so one of the questions, and Peter Boone asked this earlier, like, how does Bitcoin get to $1 million, right? So there's a kind of couple of components here. One is network effects. So the continued adoption of Bitcoin as a global monetary alternative is the specific nature of the network effect is going to expand the network and expand the utility of the network and increase the value. But its primary use case is store of value. Now, when we look at these total collection of assets with $900 trillion or $1 quadrillion, roughly 50% of this total value is functionally store of value versus utility, because you wouldn't say that 100% of $330 trillion worth of real estate is store of value. A whole bunch of it is going to be utility. So in fact, you could argue that probably something closer to like 66% of real estate is utility and 33% is store of value. Bonds, however, $300 trillion, there is almost no other use case for bonds other than store of value. Like you literally are buying bonds because you're trying to transport your economic energy through time and space, and they are worth nearly as much as real estate globally, which is insane, right? So the sort of broad argument here is that at least 50% of that 900 trillion is, or 1 quadrillion is store of value assets. Now, at the moment, let's say Bitcoin is worth 2 trillion, and let's say that the total global asset value is 1,000 trillion or 1 quadrillion, then that would mean that Bitcoin is 0.2% of the total global asset value. Now, if that goes to just 2%, if it can demonetize some of these other store of value assets, so bonds, just take a little bit out of bonds, and if we can go to 2%, then you would 10x the value of Bitcoin where it is today. And if we 10x the value of where it is today, that's let's call it $100,000 US, that gets it to $1 million. Now, the question is, how quickly could Bitcoin become worth 2% of the total value of all of the assets on the planet? That comes down to the network effect aspect of it, and things like the increasing rate of corporate treasury adoption, nation state adoption, all of this kind of stuff. So the speed at which Bitcoin is proliferating and the network effect of it is actually driving that. Now, if we got to 5%, in fact, if we get to 2% of, so if we 10x from here, if it's 0.2, we 10x from here to 2%, that'd be 1 million. If we went to 4%, that'd be 2 million, right? So there's I think if we get to 5%, we get to, I'm losing my maths here. Don't do public maths. The point here is that there's an arc where Bitcoin can start to slowly demonetize other assets and take some of the monetary value or the monetary premium out of these store of value assets and accrete that into a more premium store of value. That's how and why Bitcoin is going to grow. So I think it's going to grow from here, from let's say $100,000 US to $1 million in the next, say, 5 years. And then I think it'll go to, and the growth rate is going to slow down. It's not going to go 10x in the next 5 and then 10x in another 5. It's going to go, in my opinion, it's going to go from here to 1 million by 2030, and then 10 million by about 2045, right? So, and I've kind of modeled that out based on a power law model, and there's power law models that you can use and you can leverage to go and get your own, form your own opinion. But that's kind of how I see it taking place. It is going to start to demonetize some other aspects. Now, the thing is, I don't think it's going to demonetize real estate. A lot of people talk about it demonetizing real estate and going, Bitcoin's going to eat real estate. I don't think that is true. I think that the real estate fundamentally has too much of its value as a percentage as genuine utility. But if you look at bonds, there is no genuine utility for bonds. If you look at art, it has some genuine utility. Like there's the appreciation of it, there's the collectability of it, the absolute scarcity of it, all of that kind of stuff. If you look at money itself, that doesn't have store of value characteristics. So I actually think that it's going to eat a lot more of the bond market and the money market and even the equity market more than it eats things like real estate. But even if it did take, say, 5% of the monetary premium out of real estate, that's globally, that is not really going to damage real estate prices. You'll hear Bitcoiners say that real estate's going to crash because Bitcoin's going to eat all the monetary premium, and that's just nonsense. It's completely ridiculous. If you look at gold, aside from the fact that it's been rehypothecated to an insane amount, something like, I think it's only like 25% of the utility value of gold, of the value of gold is utility value or less than. And because it does get used in things like computer chips and all that, so, jewelry, things like that. It might even be 12.5%. I might have got that slightly wrong, but it's only a fraction. The rest of it is a monetary premium. And if you just compared Bitcoin to gold and said, okay, well, if gold carries a monetary premium because of its scarcity and its ability to store a value asset, then is Bitcoin better than gold? Yes. How much of gold's monetary premium is going to go into Bitcoin? I would say 50, 80% of gold's monetary premium is going to flow into Bitcoin. I would say 50% of bonds' monetary premium is going to flow into Bitcoin. I would say maybe like 20% of the monetary premium of money itself would flow into Bitcoin. Maybe like 2 to 5% of the monetary premium of real estate will flow into Bitcoin. So you start to see that it can start to swallow up some of the monetary premium from other parts of the kind of global asset market. That's how it gets to 1 million. The absolute scarcity of it is actually a very, very, very important part of that too, because what actually happens over time is the multiple of the impact multiple of someone buying more Bitcoin as it becomes more scarce increases, because it's not a linear path, right? So it's not just like, okay, so if demand increases by 10%, then the price increases by 10%. That's not exactly true because of the absolute scarcity. So 1 year, if the demand increases by 10%, the value might increase by 10%. Then if the demand increases by another 10%, then the price might increase by 11% or 12%. And then if demand increases by another 10%, well, then maybe the value would increase by 15%. Because of the absolute scarcity, and actually the step change in value, and I actually want to do a formula to work this out. The step change in value changes over time based on that money, but based on the absolute scarcity impacting how much demand forces the price up. Does that make sense?
Yeah, it does. Yeah, I'm thinking through the demand side because I do want to pull up a comment from Matt Pitt about the strategic reserves.
Yeah.
And we've got notes about this as well, but that is obviously from outside's perspective, radically pushing up demand for Bitcoin. Could you explain a little of what's happening there in terms of nation states now seeking to build reserves?
Totally. One of the absolute best things about Bitcoin is that it's been a bottom up, like it's been a kind of like a ground up kind of movement, which means that it started with the people. It didn't start with the companies. It didn't start with governments creating some kind of financial asset with some kind of trickle-down economics kind of function. Most of the Bitcoin is owned by retail investors currently, right? That is going to change. But like it has spread because of the people. And that's been actually one of the most interesting and powerful aspects of it is that it's the people's money. It's freedom money. Now, because of its absolute scarcity and because fiat currencies are continually being debased, companies are now going, well, hang on a second. I've got, $1 billion or $100 million or $100,000 of cash sitting on the balance sheet, sitting in a bank account, just, as a balance sheet buffer for the business, but it's losing 10% of its value every year. I'm destroying shareholder value just by keeping cash. Now, they may keep treasuries because that's actually a pretty common thing for public companies to do, is they'll buy treasuries because treasuries might have let's say a 5% yield, but money's being debased at 10%, so they're negative 5% yield. So they're destroying 5% of their cash they're just destroying 5% of their capital, right? Destroying 5% of shareholder value basically every year so companies are starting to go, well, hang on a second. Why am I holding a toxic asset on the balance sheet, which is effectively destroying shareholder value? Why don't I own a more premium form of economic storage? So companies have been the next step on that, and we could. Maybe we'll do a separate episode on MicroStrategy and that whole kind of story because I think that's interesting, and because I saw Peter asked about that as well. But MicroStrategy was the first major company really the first company to actually do this strategy. They were a dying company and they said, well, we're dying and we could either return all the capital to the shareholders or we could buy a more premium asset. Then they became the fastest growing company in the last 5 years, right? Faster than NVIDIA, I believe. So firstly, companies started doing it. Now, the difference between retail and companies is retail investors, they're investing, $500 a month, $1,000 a month, stuff like that. Mm-hmm. And there are a lot of them, and that drove Bitcoin's adoption globally, and it's been massive. But then you have companies come in, and they're not buying $500 a month of Bitcoin. They're buying $50,000 a month of Bitcoin or $1 million a month of Bitcoin each. Mm-hmm. And then you have thousands of companies doing that. And then that starts to drive a supply crunch. And because of the absolute scarcity and what I just mentioned about how the increase in demand affects price non-linearly, as in price movement will grow faster than demand will increase because of the absolute scarcity. So now governments are saying, well, hang on a second. Our whole system is based on fiat. Fiat is debasing. They're unable to pay their debts. Like the US is a great example, right? They have, I think, $36 trillion worth of debt. They can't afford to pay it back. The only way that they can pay their debt is to inflate their currency to pay back their own debt. But they also know that inflating the currency is going to make them as a country and everyone else poorer. So what is the best way to hedge yourself against your own actions, right, would be to take, and this is, people think that Bitcoin is deflationary. Bitcoin is not deflationary. Bitcoin actually has an inflation rate. It's just like, it's finite and the inflation rate is lower than gold, right? So it has an inflation rate. Bitcoin is static. The rest of the world should, in a free market, the rest of the world should be deflationary. Technology should drive prices down. Everything should be deflationary. Printing of currency, it creates monetary inflation. Now, if you're going to go and inflate away your debt by printing more and more money, the best thing you could do is you could then go and create a reserve of something that isn't going to debase, right? Something that is absolutely scarce and absolutely finite. And so now countries are saying, well, actually, why don't we create a strategic reserve? Why don't we put Bitcoin on the country's balance sheet to protect ourselves against the fiat system that they all participate in, the printing of currency and the printing of money? Now, it's important to remember that almost every country's currency debases faster than the US dollar because the US dollar is the global reserve currency, right? So the US is thinking about doing it, and every other country on Earth is pretty much worse than the US in terms of debasement. So it's a way to preserve their economic energy. Now, when that happens, we're not going to be talking about people that are buying 50,000 companies. We're not going to be talking about individuals buying $500 or $1,000. We're not going to be talking about companies buying $50,000 or $100,000 a month. We're going to be talking about countries buying billions of dollars a month. Right, and that again is going to massively increase the demand side, and you have a finite supply. So if you have an almost infinite increase in demand and an absolutely finite supply, what happens to prices? So it's a very, now that hasn't happened yet. Is it likely? Yes. It is likely. There's lots of discussion about it. There are a lot of countries talking about it. There are a lot of states in the US that are talking about creating strategic Bitcoin reserves. And you've got to remember that states in the US, many of them have economies that are larger than most countries. I think Florida's economy is if you measured it against countries, would be like the fifth largest or eighth or something, or maybe California's the fourth largest economy. So the state economies in the US are huge. They're massive. And so you've got individual states talking about creating strategic Bitcoin reserves as well. And so everyone's starting to realize that we have this once in a species, to borrow from Jesse Myers, once in a species asset that has come along that is absolutely scarce and is the most pristine store of economic energy available on the planet today, and everyone's trying to get a piece of it. Now, that is likely to change the direction of this asset over time, and that's also why I think it's going to demonetize so many of these other asset classes as well.
It's fascinating how quickly this is happening too.
Yeah.
Because transparently, when we were considering bringing this podcast back in this format, obviously new format, but bringing the Investor Lab back with you and I, that was like mid last year.
Yeah.
And again, part of what sparked that was all the realization of Bitcoin and this asset class that is a brand new, it's not brand new, but new to most people's understanding, and the different value that it brings as an asset class compared to all the other existing asset classes, and being able to realizing like, okay, we need to bring this to people. From that point to now, it has just absolutely gone off in terms of like companies, because when we started looking at it, it was like MicroStrategy was the only one having any kind of reserve.
Yep.
And then gradually people start to cotton on, and then other companies, like you're saying, companies start to do it. And now obviously there were some countries like El Salvador were doing it.
Yep.
But now it's more and more, it's crossing the chasm in that aspect of more countries. And there's an element of game theory there as well, right?
Yep.
Where then now you have to compete with each other. These companies are competing because it is a finite resource, and it's happening so quickly. Like countries are going, no, I need to build the biggest strategic reserve. No, I need to do that. And everyone's kind of racing because they can see where it's going and they can see what's happening to their currency.
Yeah.
And so they're racing to do it, but that's happened so quickly in the last
But
6 to 9 months.
This is the kind of fundamental problem with humans is we struggle to think in exponents. And what is happening is an exponential change. And so what we are like, it feels like it's moving very, very fast, and it's only going to move faster. And that's the nature of exponents. So we're on an exponential curve of adoption, and that is actually that's Metcalfe's law, right? So that Metcalfe's law, that network effect, is creating a rapidly accelerating level of adoption.
Yep.
That's only going to get faster and faster,
yeah.
right? And so that's why, it's not that hard once you do your own research to go, okay, well, if we, and I don't just extrapolate the past into the future. I don't think that Bitcoin's going to keep growing at the same rate that it's always grown at. I think the growth rate of Bitcoin from a price perspective is going to decline and slow down over time, but the movement is going to be so significant, right? So the step change from 100,000 to $1 million, right, is $900,000, but the step change from $1 million to 1.9 million, right, is is less, right? Is less in terms of the step change.
Yep.
So I want to go through. Yeah.
Yes.
I was going to go through some of these kind of questions and comments.
Well, I was going to say, because we only have 15 minutes left.
Yes.
And so I just wanted to touch on a bit of the how. Now, I'm not going to go through exactly how to, because this is not a how to. We don't have the time. But I want to do a bit of the how, and then we'll come back and try and hit as many questions as we can. So in terms of how, like if you haven't bought Bitcoin before, at the start we asked, it does seem like most of you that are on live have some experience or you've been thinking about it. Generally speaking, when you're starting out, I would recommend starting with an exchange because it's just the easiest. There are a lot of good exchanges that you can choose from. There's things like Kraken or CoinSpot or Binance or Independent Reserve. There are great options that you can use and the UX is it's user friendly. So you can sign up. You do need to submit like your passport and things as part of the KYC program, but you do that, you get approved, and basically you just it becomes a wallet. So similar to your bank account, you add funds in and then use the funds that are in there to buy Bitcoin. A lot of these exchanges also have other cryptocurrencies that you can buy as well. But that is basically how you do it. Transparently, I helped my mum set this up for herself a couple of months ago, and I was expecting I was going to need some time to sit with her and walk her through it, but I gave her the link, I gave her a YouTube video, and she came back to me in like an hour. She's like, okay, it's done. So it's relatively straightforward. There is obviously, that's part of why this is risky as well, because there's a lower barrier to entry to actually being able to do it. But that's pretty much how you do it. After that point, it is not recommended to hold your assets on the exchange. From that point, you are better off probably to go out and buy what's called a cold wallet. And that we've touched on that before, but basically that means it's like an external hard drive type device that you would move your Bitcoin off of the exchange onto that device. And that device is it's cold because it does not connect to the internet at all. And so that's how it maintains protection. You get a set of keys that you have to remember. Again, you don't want to share those keys anywhere online. You will see heaps of comments on YouTube if you look at any type of Bitcoin video of a lot of scams of being like, hey, this is my seed phrase. Don't do anything with your seed phrase, just keep it safe. But that's basically it. And as we've experienced, it's like once you actually start to hold Bitcoin and you realize that you hold it and that nobody else has control of it, it's a really empowering feeling to have this asset that I don't have to ask permission for. I don't have to trust anyone that I'm going to be able to access it. It's mine. It's purely mine. There's no friction there. So
it's also extremely daunting to take on the personal responsibility of being in charge of your own
it is,
economic capital. But I actually think that's an important step for people to take.
Yeah, it is. So that's all I'll touch on with how. Definitely, I mean, you're on YouTube now probably, so just do some research, and I'll drop some links in the description as well to some YouTube videos. But basically, it's just how to buy Bitcoin in Australia is what I would recommend searching on YouTube. And there's going to be a ton of videos. There's going to be different ones for different exchanges, but it'll guide you through if you want a guide to follow along and learn how to do it.
I will also just add to that there's another alternative to taking your Bitcoin off exchanges and storing it. So there are custodian solutions as well.
It's true. Yep.
So if the idea of storing your Bitcoin on a hardware wallet and storing the seed phrase and all that kind of stuff is too daunting and too scary, there are some really good custodian services available. Because at the moment you can't store it with a bank. But that'll change. That'll change pretty in the near future. Now, we don't have any affiliation with any of these, but just to mention a couple, and you can go do your own research. OnRamp offer a custodian solution. Casa offer a custodian solution as well, multi-sig custodian solution. There are different solutions out there. Transparently, we actually do use use OnRamp as well for part of our system, part of our setup. But there are solutions out there that you can use that if you don't want to have to store it yourself.
For sure. There's obviously fees involved.
There's fees and stuff involved in that, yeah.
There's a saying in the Bitcoin community of not your keys, not your coins, which is basically like if somebody else is holding your coins on your behalf, technically they're not actually yours. It's to some degree similar to if you had money in the bank. Technically, it's not actually your money. Technically, it's a bank's money, and then they owe you that money back to you.
Yeah.
But there are various reasons, as you will realize when you start to have that responsibility of owning your own money. It can be a lot of responsibility. So if you're wanting to do that either through a fund or an ETF or through a bank or through a custodian solution, there are options, but it's not as secure is not the right word, but it's not as much exactly your asset until you have moved it into your own wallet.
It's the best way to have self-sovereignty is to have personal responsibility and to own it yourself, to hold it yourself.
Cool.
All right.
Questions.
Let's go through them because I want to go through them from the top because there's a few interesting ones in here.
Great.
And if it's all right, I might just blast through a couple of them because What's Kicking said, no crypto at all at stage. There's been concerned with the risk of it all. And I think that's really an important thing to consider. I'm not going to spend too much time here, but Bitcoin is the most cryptographically secure technology on the planet. So it is more secure than any bank. It is more secure than any government. It uses a system called SHA-256 hashing, which is like, and just the like a 24 word seed phrase has more combinations or as many combinations as there are atoms in the known universe. It is extremely secure. The risk comes from bad actors. So if you have some peer-to-peer, like, hey, send me your details and whatever. Like I know people who have lost Bitcoin because they shared their information with the wrong people, right? So you do have to be careful. It is still there are still bad actors out there, but in and of itself, like it is, I think, if you just take Bitcoin as the asset, it's one of the safest things on the planet, right? The risk is how you handle it and who you communicate it with.
Nice.
Gary said, this is a great question here. Yeah. Is there a scenario where it would make sense to sell your Bitcoin if it gained enough to fund the deposit for your next property purchase? I actually think that this is one of the best possible use cases for Bitcoin. It's actually why I think we sort of touched on it a little bit earlier. This is actually where I think it really, really, really fits really well into a property investor's portfolio. It's impossible to save as fast as property prices are growing, right? It's like more and more people are getting shut out. So you can use Bitcoin as an accelerant to accelerate your capital to a point that it is going to allow you to go and buy more real estate. So I absolutely think that's like a core, that's one core way, and we'll touch on another core way in a minute with one of the other questions that I see in here as well. But that's actually one of the core ways that I think that it fits in with a property portfolio. So one part is diversification, and you would have heard me say the other day, diversification is diversification, but there's a degree to which you want to have concentrated bets around big ideas. And so real estate investing in Australia, that's a big idea. You want to have a concentrated bet there. Bitcoin, that is a big idea. You want to have a concentrated bet there. There's other stuff we can talk about as well. You don't want to just spread yourself too thin over too many things, but Bitcoin is definitely one of those ones that you actually do want to be involved in. You want to, so from a point of view of holding some, good. From a point of view of using as a way to accelerate your capital to buy more real estate, that's a fundamentally great way to think about it as well. Because Bitcoin is property and real estate is property, right? So, and they solve the same problem in different ways. So, you can use one to support the other. And there's actually, I'll jump to one of the other questions as well. Peter, a couple of lines later, said, would you consider refinancing or pulling out equity to invest in Bitcoin, provided that you don't want to expand your property portfolio? He also said, if you've maxed out on your property investment journey, for example, constrained on your borrowing capacity or negative cash flow, I guess the next best option would be all in on Bitcoin. Now, take away the all in on Bitcoin bit, because I think that's a big statement that I'm not prepared to support. Like all in on Bitcoin, that can be misconstrued and misunderstood. But yes, it may make sense if you have a point in your property portfolio where you are capital rich, borrowing capacity constrained, and have found the outer edges of your property portfolio. Well, then what do you do? Then what do you do?
Yep.
Then a great option would be to take some of that capital out of your property portfolio and invest it in Bitcoin. Because again, Bitcoin is property is real estate.
Which is a very real thing that people experience, right?
Yeah.
They're more likely to, if they're investing well, they're more likely to max out their borrowing capacity than they are to, what's the opposite? To have heaps of borrowing capacity but not enough equity.
Yeah, particularly if they invest well. So the way that it's sort of an interesting way to think about this is Bitcoin can be an accelerant to help you get into the market, and then you should invest most of your time and energy in expanding your real estate portfolio, because that's where you're going to get like very fantastic returns. And then with the kind of surplus, so sort of like at the start and at the end, or as you get later in your portfolio, to start to kind of like bring that out again. So it sort of fits on either end of it is the way that I would think about it, right? And so, and again, it works as a capital kind of creation accelerant. So
Awesome.
Buy high, sell low. Yeah, that was my strategy many years ago.
Great strategy, guys. Do recommend.
Okay.
Also, Will Smith, I do not recommend. I know that we've already touched on this, but I do not recommend selling blood and plasma to buy more Bitcoin. I mean, you do you, Will.
Your body can always create more blood and plasma. So
not medical advice.
Selling an infinite resource for a finite resource. I don't know.
Maybe
that works. Maybe that works. Let's park the MicroStrategy one for a second. We'll come back to that.
CGT. If you want to get Goose and Gabby angry,
ask about CGT. Yeah, taxes are theft, and monetary inflation is taxation, which is theft, and taxation generally is theft. So we're sort of not big on that. But if you're Bitcoin 10x and you decided you're happy to spend some of it, I mean, shit, even if at 1.5x, right? Even if we went up by 10%, doesn't really matter. The premise is the same. You wanted to spend some of it on lifestyle, property, etc. Is the profit taxed if you don't bring it back into the fiat system? Now, there's two parts to that. So technically, yes. So the official answer would be if you're a tax resident in Australia, it's going to be a capital gain, and you're going to be taxed on that capital gain. If you had, and this is not, I'm not representing this as a good idea or whatever, but in principle,
it's a bad idea.
Yeah, in principle, if you had a mechanism to, keep that out of the kind of monetary system in Australia or whatever, like it's like if I have chickens, right, and those chickens lay eggs, and I sell those eggs to the neighbor for $5, do I have to declare that? Maybe not, right? Like it's so the legal and technical response to that would be yes, it'd be a capital gain, and you pay tax on the capital gain. So
yeah, it's an interesting topic, I think, because as we've been saying, the growth of this asset has been huge, particularly in the last month, in terms of like something that governments and everything are thinking about. And I think the Australian government are still figuring out what's best, how to approach this as an asset type, because it is simultaneously a commodity, which can grow in value, but it is also a currency. So I think of it in essence more like a currency. And then you think about, should currency experience capital gains tax?
Yeah.
If yes, because that's how they're treating it. It's like, if yes, then also if my cash is being debased, then I should be able to claim a capital loss, right? And then I can claim that as a tax as well, but they don't treat it that way. So technically, yes, even if you don't sell it and turn it back into cash, I believe currently there will be a capital gains event on the growth of your Bitcoin.
There will be.
Yeah.
Yeah, it's a capital asset. Yeah. It's not treated as a currency.
Yeah.
So there will be a capital gains tax on it. Yeah. Thoughts on Musk's XPay goal? Banks all talking about XRP taking on Swift, BlackRock, etc., gearing up to dive in, etc. So I don't know what Musk's XPay goal is. I think there's at least a 50% chance that he uses Dogecoin as the foundation layer for XPay, but I don't know that, and that's just hyperbolic speculation. In regards to XRP, XRP, for those of you who don't know what that is a crypto technology project, right? It is different from Bitcoin. It's not a commodity. Bitcoin is a commodity. XRP is a technology, blockchain technology. So I'll always state that there's Bitcoin and crypto. So Bitcoin is a commodity. XRP is a technology company, effectively. The issue that I see with XRP is that there are other projects that solve what XRP solves much better than XRP does. So I don't believe the hype. The XRP will be integrated into the financial system in the way they think it will be. I think that Solana is going to be the payment rails of the internet. It outperforms XRP on basically every single metric by a factor of 10. So I think that there's a lot of hype around XRP at the moment, but I think it is just hype, and I don't actually think it's actually going to do anything. So Yeah, so the way that I think about it is that Bitcoin is the premier store of value in terms of crypto specifically. The kind of cryptoverse. Bitcoin is the primary store of value, and I think the kind of second best in there, which is a technology, which is not a commodity, is Solana. So that is, and we could talk about that ad nauseum, but that's just the kind of Cliff Notes version.
Awesome. This question from Wayne. Wayne, I think you're a client too. Hey, Wayne. I'm averaging in as well with my SMSF using EBTC ETF with ComSec. Thoughts on ETFs versus direct ownership? Again, I think this is like it's such a new concept as well in the last 6 months. This idea, like Bitcoin being approved as an ETF asset, was a huge unlock for the asset type. Again, it's good in one sense for you to be able to gain exposure without having the rigmarole of setting up a wallet and actually buying things yourself. My preference is always going to be direct ownership, just because my preference is actually being able to hold your own assets, and that's an element of this asset that I really appreciate. Do you have any different opinions there?
No, I think that's really it. Like, I think that it's always going to be better objectively to own the asset yourself, right? So direct ownership is going to be better, because when you own assets, so even if you buy shares in a company, you don't own those shares. You have a beneficial right to a share, which is very, very different, right? So, and the same kind of thing applies with the ETFs. You don't own the Bitcoin. You own the beneficial right to the returns of the Bitcoin, right? So you don't actually own the Bitcoin. ETFs are a great way to get exposure to the asset without the responsibility of custodianship. And so to that degree, I think they make a lot of sense for a lot of people, because, if you just think about it, like, Bitcoin is a really fantastic thing to own. Again, I'll restate, I don't think it's better than real estate in Australia, but it's a really fantastic thing to own. And if you think about like your 70-year-old mum or something like that, wanting to own Bitcoin, do you think it's practical, reasonable, accessible to be like, hey mum, you've got to go buy some multi-sig thing and stamp your seed phrase onto some titanium, and the tech barrier could just be too high. And so then you've got a choice of like, does mum miss out on participating in one of the greatest technologies invented, or is there a better on-ramp? And I think it serves a really important utility function for adoption. So I am pro the ETFs from the point of view that it accelerates adoption and allows more people to participate. But it doesn't replace. I don't think it's a superior mechanism to actually owning it. But there are some reasons why you might want to do it. For example, you may not be able to. I don't know, but you may not be able to own spot Bitcoin directly in your SMSF. You might not be able to. So maybe the only way you can get access to Bitcoin exposure in your SMSF is through something like an ETF. So there's that.
Yeah, that's a good point.
And from a slightly more exotic perspective as well, the ETFs do facilitate things like options as well, like the IBIT ETF facilitates things like options. So you can then do things like options and derivatives trading on Bitcoin if you wanted to do that, if that was something you were interested in. So I think they serve a really important function, particularly from an adoption perspective of getting TradFi into the space. I think it's very important. But it's not as good as owning direct. I think if you think about it, there's only 21 million Bitcoin that are ever going to exist on the planet. There's something like 68 million millionaires on the planet, right? So by definition, not everyone is going to be able to own a Bitcoin, right? And if you could just own one Bitcoin, and just hold on to that, and hold on to it yourself, and have that as some kind of like thing that you pass down in your family or whatever, that's just going to be very powerful. That's going to be a really powerful base for you. So,
yeah. Note here from Tamara. I bought back when you deposited money to a bank account in Australia as a safer option to purchase. However, if you mentioned Bitcoin at the bank, some banks would refuse your deposit.
Yeah.
Yeah, it really happens. I think something as well, if you're going down this path, again, YouTube videos, when you're looking at how to buy Bitcoin in Australia, there'll be guidance on which banks are more crypto friendly. A lot of them right now are not. A lot of them you will have trouble transferring funds out of your Australian bank account onto an exchange.
Which is a bloody good reason to go and buy Bitcoin because
comparing. So if you put $100,000 into Bitcoin at the end of 12 months, 10% growth, you would have $110,000, right? You've made $10,000 on your $100,000 investment. So that's 10%, right? Versus if you had $100,000 and you bought a $500,000 property using leverage, you've still spent that $100,000, but you've got a $500,000 asset. If that $500,000 asset grew by 10%, that will have grown $50,000 at the end of 12 months. And so you have made $50,000 on your $100,000, which is a 50% gain, a 50% return on invested capital in that asset in the same period of time. So this is kind of what we're touching on when we talk about leverage being such a powerful asset, available tool for real estate investors compared with Bitcoin. So that's how you kind of factor in the mix of the two.
Awesome.
Cool. I think we are done.
We are done.
There's
We've got
so
to wrap
much
it
more
up
we
because
can touch on.
I've realised I've got to prepare for a meeting in 20 minutes.
Meeting. Okay.
Yeah.
Guys, if you have enjoyed this, thank you so much for sending through the questions. Goose is the DJ. Wayne, he's good. He's really good. You've been doing it for a while. Anyway, so we are probably going to do another episode. We'll probably do more episodes. So if there are things that you want to hear more
We're
about.
definitely going to do more episodes.
I mean, probably going to do more episodes on Bitcoin.
Yeah,
Chris.
we should. Yeah. Send in your questions too.
Yeah, send in questions. So there's a link in the show notes for submitting any questions. If you want to do like a voice question, that would be nice and we could play it on the show. But otherwise, just use it as a way to send in questions. Or if you have any questions or other topics that you want us to cover in terms of Bitcoin or anything else, just leave a comment on the YouTube.